It's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that's something that you're interested in, make sure that you subscribe to the channel. Now, if you are a new subscriber, welcome. I really am glad that you guys are on your Forex journey, that you decided to learn a skill like this where you can literally multiply your money from anywhere in the world. As long as you have Wi-Fi and a mobile device and you're of age, you can really get into the trading game. Now, trading is extremely simple, but it's not for everybody. So if you are willing to stick it out, stick with those losses and really correct yourself so that you can be profitable, then you are again in the right place at the right time. So welcome back to all of my loyal subscribers and people who are serious about making that money. Now, if you are a new subscriber, welcome to my channel. My name is Cha Cha. I have been trading for about 4 years. And I really just decided to share my knowledge with people. And this was the best way that I thought to reach as many people as possible. So I have so many different videos, so many different playlists that I do encourage you guys to explore. But I'm so happy that you decided to come and spend some time on your Forex education today. Now, in today's quick video, we're going to be talking about why indicators are important in Forex and if there is even a necessity to use them. Now, I feel like people have split opinions on about if you should use indicators or not, but it's all going to come down to what you're comfortable with your trading style. Are they absolutely necessary? No, they're not, but they do help you to understand price action and what's really going on. So before we get into that, we're just going to go over some basic market structure and what's happening and what we're looking at every time we open a chart on TradingView. So TradingView is the platform that I'm going to be using today. This is where I do all of my analysis, and this is what it looks like. And right now, I don't have any indicators on my chart, but I am going to go over, again, price action and market structure first. Then we're going to talk about indicators a little bit. This video isn't going to be too long because I do have a full playlist just on Forex indicators if that's something that you want to learn more about. So this is the daily chart. You can change the time frame. You can look at this on the 4 hour, the hour, or the 15 minutes. And what those time frames tell you is basically the frequency at which these candles are forming on your chart. So if you're looking at the daily, you are going to get a really good analysis because it's a lot of macro data that you're analyzing. But again, you can look at this on the 4 hour time frame. You're still going to see candles and you're still going to see things happening. Now, first, we need to talk about support and resistance because this is pretty much the cornerstone of what helps us choose our entry and exit points when it comes to trading. So I'm going to go ahead and I'm going to put a line right here, and I'm going to put a line right here, and then I'm also going to put a line right here. Now, usually when the market you start to see a lot of wicks at the bottom, or you start to see a lot of candles stopping at the same place at the bottom. This is known as an area of support, which is why I put a line here. So we can see that price was supported here because price actually went up, right? Then we can see that price was resisted. Now, resistance is usually found at the top of a buying trend, and this is where the market is having a hard time getting higher. So price resists going higher, and then it actually comes down, usually to a previous level of support. Now, I really want to know if you guys are following along. So if you've made it this far in the video and you're watching this right now, and you understand so far support and resistance, just go ahead and drop a 7 in the chat. Again, support is where price, you'll see it has a hard stop at the bottom. It goes up. Usually when price is supported at the bottom, it's a sign of a buying trend. When price is resisted at the top, this is usually where a selling trend started. So we can see price was supported again at the same area where it was supported before. And then instead of resisting, price broke out of that, and the new support area is where resistance previously was. So this is how we know the trend is going to continue. So the previous resistance area became a new level of support. So now we have to form a new level of resistance, and we can see price had a hard stop and then it sold down, right? It almost sold back down to the previous support, but not quite. It went back up to the area of resistance. It came down back to the previous level of support, right? So support and resistance are just areas or levels in the market where price either tends to be supported for a buy or resisted and it sells. Now, if price breaks past a previous area, for example, we can see it happening. The last thing that was happening when the market was open, price broke past the previous area of support, and we can only assume that it's going back down to an even lower area of support. And that's the cool thing about the market and the patterns that it creates, is that support and resistance levels are also repeated, and these patterns help us determine what is likely to happen next in the market. Now, once we understand price action, we can actually start to add some indicators to our chart that's going to help us identify price action even more. So let's start with one of my favorite indicators, which is the EMA. This is known as the exponential moving average, and it pretty much gives us some insight as to where the market is going, if the market is going to buy or sell. And this is based on where the candles are in relation to the EMA and where they're closing as well. So all I'm going to do is open my EMA settings, and I'm also going to just make the line a little bit thicker just so that we can see what's going on. Now you'll notice that whenever the candles are above the EMA, the market tends to be buying. But something special I want you guys to notice about the EMA is that the EMA will act as an area of support, right? And whenever the candles get close to the EMA, but they don't go below or close below the EMA, that usually lets us know that price is going to continue to push up. So you can write this down. Usually when the candles are above the EMA acts as an area of support. So even if it sells, we know the market will only sell back down to the EMA. So this is confirming what price is doing and what's actually going to happen. So let's look at the lines that we already have here on the chart. Let's look at this area of resistance that became an area of support. Not only was the new support area the previous resistance area, but we also see that it only came back down close to the EMA. Even if we have a huge wick on the bottom of a candle, we see that the candles are coming back down to the EMA and going back up. Now, vice versa, when we see that the candles start to fall below the EMA and close below the EMA, meaning the top and bottom of the candle are below the line, the EMA starts to act as an area of resistance. This means that every time price gets close to that line, it comes back down, and price will continue to sell. And I'll just scroll back a little bit further in the chart. And it's funny because even in the past, we can see how the previous lines that we drew are not only areas of support, right? And we have another one, area of support, but the same thing is happening. The candles are coming back down to the EMA at a previous level of support we've drawn, and we've gone back up. Versus when the candles are below the EMA and below the previous resistance, they're selling. So again, I'm just going to delete these lines off of my chart, and I'm going to scroll back into the past. And I want you guys to tell me if you can see how when the candles are above the EMA acts as support. And when the candles are below the EMA acts as resistance, right? So that's just understanding price action, right? And let's actually put these lines back on our chart for a second. That's actually understanding price action. And that's one indicator that we can use. Another indicator that we like to use is the stochastic. And this is also going to be reflected in what's happening with price. Now, again, here's a perfect example where we can see this candle dropped below the EMA and it closed below the EMA. At the same time, we can see the stochastic facing down, confirming that this is going to be a downtrend. Here's an example of a buy. We see a demand area. We see price coming back down to the EMA, but every time it came back down to the EMA, it acted as a support area and the market went up. Simultaneously, the stochastic was also facing up, letting us know that the market was going to buy. So let's actually take our EMA off and only focus on the stochastic. And what I want you guys to see is that when the stochastic is facing down, the market is facing down. When the stochastic is facing up, the market is facing up. So you can use indicators to help you understand price action, but you don't necessarily need them. It just gives you additional confirmation into what you're already seeing. Now let's look up one more indicator. It's called the Parabolic SAR. So this is Parabolicsar. And this is another simple indicator that you can use that will help you identify price action. And let me just make this one a little thicker as well. I'm going to go into the SAR settings. I'm going to click on the blue box and I'm going to change the thickness so that you guys can see these blue little crosses on my screen. Now, what you'll notice is that even if we were to keep our support and resistance lines on here, let's draw some more. There's a resistance. There's a support. There's another support. Now we can see this is the area of resistance. Now, whenever the candles fall below the parabolic SAR, let's take the stochastic off. Whenever the candles fall below the parabolic SAR, the market tends to be dropping, right? The market tends to sell versus when the candles are above the SARs, right? And we can see that this is a supported area here, the market tends to buy. All right, let's look at another example. We can see this is a area of resistance. We can see the candles crossed over below the SAR on this candle, and the candle sold down to almost down to a level of support. So indicators won't tell you everything about the price, but they will give you some insight as to which the way the market is going. So today we talked about the EMA, we talked about the stochastic, and we talked about the parabolic SAR. These are all three different indicators that you can start to experiment or play with that'll help you understand price action even better. But if you look on TradingView and you click indicators, there are literally so many indicators that you can use. Let's just click technicals, and you'll see that these are all indicators that you can explore that will give you more insight into price action. So I really hope that this video was helpful. If you guys have any questions, you can comment down below and let me know. If you'd like to connect with me outside of YouTube, you can find my Instagram TradingView, LinkedIn, and just other ways to get in touch with me in the link in my description box as well. If you guys want to register for personal mentorship and you want a full course of these videos that are in a structured order that will help you understand and become a better trader, you can register for the Money Mantra Learning Portal. And again, the information is down below. That's all I have for you guys today. Until next time, rich friends.